2026 is off to an absolute bloodbath, and it's only going to get worse. Bitcoin is down 30%, Ethereum and Solana even worse, altcoins are bleeding, and fear and greed has not been this bad for over a year. So today, let's take a look at why and what you can do about it. 2025 was one of the most difficult markets I've ever seen. Not because the opportunities weren't there, but because the market moved in ways no one could predict. All-time highs were hit across the board, but then wiped out in a moment. And 2026 was already set to continue this and be even worse. My name is Adam, I'm one of the founders of Cryptonary, and today I want to sit down and share with you the framework me and my team at Cryptonary are planning to implement for the rest of 2026. Without a framework, you won't be able to navigate this market. You'll make bad decisions, you'll enter too early, you'll exit too late, and you'll probably be left with nothing. Yet, the next 12 months have the potential to be the most lucrative in crypto history. Generational wealth will be made. You may set yourself up for the next decade or be set at square one. All will be determined over the next couple of months. As we started 2026, me and the Cryptonary team sat down to go over a framework that we would use to navigate the markets. And so let's dive into that. Our team has managed to find six-figure airdrops, find multiple 200x meme coins such as WIF, PopCap, and SPX, get into majors such as Solana at sub $10, and time again front run narratives. And that's what we plan to continue doing as we move forward in 2026. So let's do a recap. 2025 was brutal, not because the opportunities weren't there, but because the market moved in ways no one could foresee. I'm going to share the Cryptonary thesis right out of the gate, and then we can go in and discuss things further and explain our reasoning. The rest of Q1 and Q2, choppy, unpredictable, and very difficult to navigate. Most people will get wrecked and wiped out of the market before the game even begins. Now, second half of the year, Q3 and Q4, we expect for things to get very, very lucrative. That's where you'll start to reap the rewards of the seed you plant today. So, why? Let's take a look. Right now, we're seeing incredible macro uncertainty, geopolitical tension all over the world, and the volatility of the market is shaking people out. Most people will get lost. However, if you manage to get through to the second half of the year, you will win. 2026 is all about getting positioned at the right time, not too early, not too late, and exiting with a strategy. Most people won't be able to. They might be very close to opportunity, but that doesn't matter if you don't complete the race. And that's what we're seeing for 2026. Most people will panic in the first half of the year and then end up trying to chase in the second half. That's a recipe for disaster. The solution: strategically allocate for the next 5 months and strategically exit in the second half of the year. This is the exact framework we're going to use for the rest of 2026. We're going to take a look at the macro overview, the narratives we believe will shape 2026, what we're positioning in, and what we see for Bitcoin, Ethereum, Solana, and Hype, one of our top picks for 2026. So look, we dropped our 2026 outlook at the start of the year, and we said exactly what's playing out today. We said Bitcoin will pull back 20 or 30%. People are going to panic. They're going to exit at the wrong time. By the time they're ready to re-enter, they're already a step behind. Then they'll be left chasing while everyone else is winning. And when they're looking to enter, everyone else who knew what they were doing will be exiting on them. So they get in late and they get out late. A recipe for disaster. Don't panic, don't exit early, and watch everyone get in before you do and everything 3x's. Because by the end of it, you will be playing catch up, except the race will be over. It doesn't matter how good of a fight you put up if you get choked out before the last bell. And that's what we're going to make sure doesn't happen today. If you don't have a framework. With a framework, the market volatility will not be a problem. And you won't panic along the way. Things in life are often as difficult as we make them, so by putting in a framework, you'll set yourself up for a very easy entry and exit. 2026 will make 2025 look like a field trip. So many things are happening. Major VC unlocks, new altcoins launching left and right. These institutions follow macro conditions. The mechanisms that drove previous markets will not be there. So if you try to follow that old playbook, you will get wrecked. Bitcoin hit $127,000 in October, and then in a matter of 24 hours, all of those gains were ripped away. Here's the uncomfortable truth. If you were fully allocated to crypto throughout 2025, and you didn't make calculated rotations, and you didn't take chips off the table, you at best would be back at square one, but in most cases, you'd be down. Gold outperformed, silver outperformed, equities outperformed, even bonds had their time. Crypto, yes, we saw highs, but it did not matter if you didn't sell. Even us at Cryptonary, we got some things right, we got many things wrong. We missed out on the stocks run. We missed out on gold. We missed out on silver. We missed out on equities. We caught airdrops, it's just hype. We got into 200x meme coins, and we did see massive returns with many trades. Going into 2026, we're going to make sure we don't miss out. The only way we can make sure we don't miss out is by implementing a framework from the very beginning. This framework has already helped us massively over the first 5 weeks of the year, and we intend to continue using it to see out 2026. Let's start with the foundation of all of this, macro. Now bear with me, I know that term scares a lot of people away. We'll keep things very simple. So when you think of macro, think of three elements: the job market, inflation, and interest rates. These three elements are all you really need to keep an eye on from the top level down, as they influence everything. Ultimately, macro guides us in knowing whether we're risk on or risk off, which basically means is more money coming in or is money going out? And that's what these three things do. If the job market's strong, that means people are earning money and they have more capital to put into the market. If inflation goes too high, it prices people out, where people aren't willing to spend. And as interest rates drop, it makes it easier for people to borrow, so there's more spending. So you can kind of put these things together and say, hey, if interest rates are low and inflation is healthy and the job market's good, this sets up for a risk-on environment. Whereas inflation is too high and job market is terrible and interest rates are too high, then people aren't going to be willing to invest, especially in high-risk assets such as crypto. So what do we see for 2026? We're already off to a rocky start. So one of the biggest macro events of the year was to see who would replace Jerome Powell as head of the Fed. There was a lot of speculation on who would step in. And as we know, the markets don't like chaos. The guy who was nominated a couple of weeks back is Kevin Warsh. Kevin is expected to be a very dovish Fed chair, which means he'd be very open to interest rate cuts, which would mean positive for the economy. But it's not that simple. If you cut interest rates incorrectly, you're setting the market up for an inevitable recession. The markets need to see a healthy transfer of power and clarity on what Kevin Warsh intends to do before they feel comfortable risking on. Then look, macro is big picture. People get lost week to week by focusing on the little things. However, let's open our minds. Let's be real. Look at the geopolitical tension across the world. Russia, Ukraine, Iran, Israel, Palestine, Israel. We're seeing chaos over Greenland with the US. There's infighting in America. Markets don't like this. The more chaos, the less certain investors can be in risking on in the market. And until big players risk on, you're not going to see any market, let alone crypto, start to perform. But here's the obvious trick, and one that everyone really knows, but no one is comfortable enough in acting. Uncertainty is where the opportunity is found. So while the rest of the market panics, watches Bitcoin pull back 30% and are too afraid to enter, this opens the door for you and me and people who do their research to risk on. Why would you want to buy Bitcoin at $150,000 after all the institutions and whales are in? Why wouldn't you buy now? Yes, Bitcoin's dancing around 60 to 70,000 and there is room for further pullback, but this is where you get positioned. Let's take a look. If Bitcoin hit $200,000 by the end of 2026 and you get in at $130,000, that's less than a 50% return. Whereas if you get in at $70,000, you're close to 300%. So where do you see the asymmetric risk reward? Exactly. The key is not risking on too soon, as we don't know how low things are going to go. And if you get in right now and you have no more capital on hand, you might miss out on some major dip buying opportunities. So our plan is to strategically get allocated throughout Q1 and Q2 while keeping cash on the table to assure that if anything goes wrong, we can continue to get into the market without sitting on our hands and panicking. We expect, as macro uncertainty clears up in the second half of the year, for the markets to risk on, and we expect things to run. We believe at Cryptonary we see all-time highs for Bitcoin, Ethereum, Solana, and many other opportunities present themselves in the second half of the year. But it won't matter if you get ice in the first half. The practical takeaway here, and our big picture, is get allocated, slow and steady, don't panic, practice patience, control your emotions, keep an eye on the big picture for signs that things are about to risk on, but get into the markets beforehand. But keep cash on hand throughout the whole journey. You'd rather have too much cash after getting positioned than getting fully allocated and be stuck with no cash. Now, let's dive a little deeper. You already know what we think about the general market. You know where we expect the market to risk on, and you know we believe in allocation over the next 5 months. However, what do you get allocated to? Because if you allocate to the wrong things, not only will you underperform the market, you could be setting yourself up to lose everything. Let's take a look at the assets that me and the Cryptonary team are actively allocating to. And spoiler, a lot of these won't surprise you. Let's start with Bitcoin. Bitcoin is no longer a speculative asset. It has been embraced by massive institutions all over the world, and it's seen as one of the most logical investments for anyone in the space. Bitcoin is a legitimate institutional asset. The ETFs changed everything. The Bitcoin ETFs were the fastest growing ETF product in history. And ultimately, here's what most people don't understand. These institutions are not going to buy Bitcoin on a random dip on Tuesday. They have an outline for when they plan to allocate, one of them being the macro picture. So when we look at Bitcoin now, and we see ETF outflows larger than inflows, this can cause a lot of panic. But it doesn't mean that these institutions don't believe in Bitcoin. It just means they have a plan on when to enter and when to exit. Let's be realistic. Entities like BlackRock did not enter Bitcoin out of goodwill. They entered because they saw an opportunity. And when you have titans like BlackRock get behind an asset, it almost makes it too big to fail. They have a vested interest in Bitcoin's success. When the smartest money in traditional finance start paying attention, you probably should too. The Bitcoin strategic reserve is very real. And when you see all administrations around the world getting very bullish and positive on Bitcoin, you really need to pay attention. As of late 2025, there were over 160 treasury companies across over 30 countries that collectively hold over 8% of the Bitcoin supply. This isn't a trade. This is a philosophical statement. Our view, Bitcoin is the most obvious asymmetric risk-reward opportunity in all of finance, and we'll be allocating a lot of our capital to Bitcoin, not as a trade, but as a long-term buy that we intend to hold and capitalize on. It's not going to 100x from here, but it's absolutely a great opportunity to hedge against the downside of the crypto market. And for me, I actually denominate my net worth in Bitcoin. It doesn't matter if you're getting richer in something like fiat, if you're not getting rich from Bitcoin. So the ultimate game of what we have to do here is to outperform Bitcoin. So of course, accumulate, and now let's look at how we're going to outperform. Next up, and you probably guessed, Ethereum. Now over the last few years, Ethereum has been stuck in Solana's shadow, but things are starting to change. As we've seen, tens of institutions are starting to use Ethereum as their go-to layer one as they launch their tokenized funds. Ultimately, Ethereum today has the largest ecosystem of developers, it has the best security, and it has some of the best products for DeFi. The narrative for a while shifted to layer 2s and Ethereum killers such as Solana. But this many years in, and both of those things are being put aside, Ethereum had some major upgrades in 2025, not only increasing its affordability and scalability, but its speed and security also. This will only continue in 2026 as more upgrades come out. Very recently, the founder of Ethereum, Vitalik Buterin, stepped up and made a massive concession. His plan for Ethereum and L2s being the scaling solution is no longer relevant. He believes that Ethereum can build on its own and improve its weaknesses and issues. This is actually very bullish. Kudos to the team at Ethereum putting this out there and accepting whether we're wrong. And this only made us more bullish. With huge innovations such as the Genius Act, making it a lot easier for institutions and big entities to launch their own stablecoins, this opens a door for Ethereum, as there is no better platform for these institutions to launch their stablecoins on than Ethereum. Ultimately, Ethereum is the backbone of DeFi. And as these entities come in and choose to tokenize assets and launch stablecoins, Ethereum is where they'll go. The Petra upgrade in May improved staking layer 2 efficiency, and for Saka in December dramatically improved data availability. The network's executing faster and cheaper than ever. If you haven't used Ethereum in a while, I highly encourage you to check it out. Ultimately, when it comes to all of these products in crypto, it's a matter of how good are they. Ethereum has seen massive innovation since many people used it back in 2021 for stuff like NFTs. Ethereum is massively undervalued relative to its infrastructure dominance. When the narrative catches up to the fundamentals, we expect Ethereum to run and outperform in 2026. In one word, we are buying. Next up, Solana. Now, Solana had huge wins in 2025, with craziness such as the meme coin supercycle, from Trump dropping his meme coin to Solana hitting all-time highs. A great run for Solana. But there's been a lot of FUD going around over the last 6 months. People looked at Solana as a gambling chain, and they decided it wasn't serious because of the mess that was going on. However, as the market has risked off, we've seen a huge user base continue to use Solana. What we originally thought were users flocking in for the gambling side of things with meme coins, these people have stuck around, and compared to every other L1 on the table, including Ethereum, Solana seems to be the go-to for retail. And as of right now, Solana is trading at near $80. This is the most clear no-brainer on the market, almost a 3x away from all-time high. And as naturally we expect crypto to grow, it almost seems inevitable for Solana to go back to those heights. Ecosystems matured, real products are being built, and interest is building. Like Bitcoin and Ethereum before it, we deem it highly likely for Solana to get an ETF in 2026. Applications already progressing, and it seems like an inevitability. Later in the year, we have the Alpenglow update. This is only going to further improve Solana's scalability and security. And as these things mature, it legitimizes the chain even more and incentivizes developers to build other cool, innovative products. As Solana's performance and decentralization improves, it makes it a no-brainer as a whole. Our view, Solana is a core holding alongside Bitcoin and Ethereum, and it's not going anywhere in 2026. Like Ethereum, we expect Solana to outperform Bitcoin, but even more so than Ethereum, mostly due to its market cap. The smaller an asset, the more upside. Now, onto one of our top picks, and I'll say up front, we're incredibly biased. That asset, hype, or hyperliquid? Look, we got into hyperliquid pre-token launch. We farmed it early, and we had many members and 5 and 6 figures at the time of the drop. The average payout for a Cryptonary member for farming hype was nearly $29,000. And then it went in 20x from there, going from $3 to $60. So of course, incredibly biased, incredibly bullish. However, hyperliquid's only starting to get traction now. Traditional finance guys are starting to pay attention. In January, we saw billions and billions of dollars in trading volume come to hyperliquid due to the trading of silver and gold. Hyperliquid is now processing more transaction volume than pretty much every other chain out there combined. Hyperliquid is a layer 1, but unlike Ethereum and Solana, they focus more on building flagship products across different areas of DeFi, which take the best elements from other apps but fine-tune them and make them even better, such as the Hyperliquid Perpetual platform and the Hyperliquid Vaults platform. As we've already seen to start the year, we've seen huge upgrades such as HIP4, which brings the predictions market to Hyperliquid also. And as you've probably seen, Polymarket and other projects like that are getting mainstream attention. So as Hyperliquid create its own ecosystem around this, we only expect it to grow further. We have a full deep dive that we did in Hyperliquid live for Cryptonary members that you can find on our YouTube channel. Not only that, Hyperliquid is one of the only protocols in crypto that is actually profitable thanks to its buyback mechanisms. When you take genuine revenue and you take a quality product and you take mindshare, it sets you up for absolute outperformance. Once again, Hyperliquid as a whole, just like Bitcoin, Ethereum, Solana, but even more so. If we had to pick one asset between Ethereum, Solana, and Hyperliquid, it would be a no-brainer for us. Now, beyond individual assets, let's take a look at the narratives and sectors we believe will dominate 2026. Money flows where attention goes. And if we can spot the narratives that will get the most attention, that's where we'll find the winners and outperformers that have 5, 10, 20, and even 50x potential. We've covered macro and when to risk on. We've covered majors and where we think we're going. And now we're going to take a look at the narratives one by one. By being in the market day to day, we've gotten a very good feel for what people want and what people need. This has allowed us to separate the noise from the nuance. And this is how we find narratives early. We look at storylines and sectors that capture mindshare, and we find the coolest, most interesting products in that space. Look, in our opinion, the altcoin season everyone has been waiting for is not going to come. We're not going to see dino coins that ran in the early 2020s capture their former glory. Instead, these narratives with new projects is where the money's going to flow. I made clear earlier, our main allocation is to the majors and Hyperliquid, but we absolutely intend to allocate to sectors such as RWAs, meme coins, privacy, and so much more. Even stable coins at that, because there are opportunities there, but we have to see the market mature. First up, let's take a look at Perpetual DEXs. We just discussed Hyperliquid and its upside. But what happens is you usually see lots of imitators come along when you see a platform run. So we've already seen platforms such as Asta and Lighter come into the market. Now, in our opinion, they don't come close to Hyperliquid. That doesn't mean they're not going to perform. As more traders come on-chain, there will be a market for some of these other DEXs. So keep an eye on them. There's going to be a natural shift from centralized DEXs to decentralized DEXs. Now, it's not all sunshine and rainbows. When things are on-chain, it makes it easier for people to track wallets and traders. And not everyone wants this. Privacy is often a big concern for many, so we don't expect some of the biggest players to come on. Companies like Binance cannot be completely trusted, and maybe that transparency is what people are really looking for. Next up, prediction markets. We've already seen platforms like Polymarket gather mainstream attention. And we've seen contenders like Kalshi also tap into the hearts and minds of people in the Solana chain. As we've already said with HIP4, now we have Hyperliquid entering the space. Look, the same building blocks that we saw for the meme coin supercycle play a part now in the prediction market. We only expect this to continue, especially as we head into the midterms and you see this geopolitical chaos because everyone has an opinion. And platforms like Polymarket allow people to express their opinions publicly. The core insight here is information is a tradable asset. Polymarket and Kelsey are the leaders, and we do expect tokens to drop at some point in the next year or two. And it is possible to find arbitrage opportunities between different platforms. Next up, and it might not be an exciting one, it's stablecoins. Look, as crypto adoption increases and we get more regulation, naturally more stablecoins are going to be launched. And this is a huge net positive for crypto. The more players that come in, the more lucrative for the markets. Now, you've probably heard of the Genius Act. The Genius Act was basically clarity for institutions and banks to launch their own stablecoins. We're already seeing many contenders come to the table. In our opinion, it's not Bitcoin, Ethereum, Solana that are the killer products in crypto. Stablecoins, which are actually the future. They're used for remittances, savings, trading, commerce by hundreds of millions of people all over the world. It's a sector within crypto that actually touches the lives of millions of people. And with the regulatory picture clearing up, this is only going to continue. Now, we don't make direct investments into stuff like stablecoins, as they're pretty similar to fiat. They're not going to run. However, there are ways for you to capitalize on the opportunity, one being Circle, the company behind USDC. Now, we very recently released a report on Circle and why it can be a stock worth buying. I'll give you the very short thesis up front. As demand for crypto increases, people will need stablecoins like USDC. And as demand increases, that benefits the company Circle. However, when the market risks off and things crash, people are swapping their assets for USDC. So it's almost like a hedge in both directions. Long term, as stablecoin demand increases, Circle wins. In the short term, whenever the market risks off, Circle also wins. Next up, RWAs. Now, RWAs are interesting. It's a sector and narrative that's been around for many years, but it's never quite caught on. Very early on, people kind of confused them with NFTs. And so they never actually took the traction that it was destined to take. And stuff like tokenized treasuries, private credit on-chain, stocks moving on-chain, and real institutions putting real capital behind it, we think 2026 is the year they finally get serious. We've already seen quiet but significant growth happening under the hood. We expect it to capture a lot of mindshare across the crypto space. Next up, privacy. Now, full disclosure, we saw two massive runs in 2025 for privacy coins. We saw Zcash and we saw Monero, but that's not what we're talking about right now. Zcash 10x and Monero nearly 4x, but that's not what we're referring to today. You're always going to get regulatory difficulty with assets like this. When we say privacy today, we're talking about the privacy built in assets like Ethereum, Solana, like stablecoins, etc. It's not the assets within the sector that we're keeping an eye on. It's the regulatory clarity for these chains. It just removes the target on the backs of these platforms such as Ethereum and Solana. So naturally, we expect both security and regulation to increase for these assets in 2026. Now, on to the one I know many people have been waiting for, meme coins. Now look, meme coins are very controversial. However, I'll be very honest, meme coins are a special place in mine and the rest of the Cryptonary team's hearts. We caught the meme coin cycle early. We found WIF at $4 million market cap, and we wrote about it publicly. WIF went on to hit over $4.8 billion in market cap. That was a 1,200x for us in late 2023. And around that time, we got into PopCap at $3 million market cap, which as many people know, crossed the 2 billion mark. Shortly after, we got into SPX at around $10 million market cap, which reached over $2.2 billion in market cap. So of course, when it comes to meme coins, we're going to be buyers, and we also know what we're talking about when finding a good meme. Even within 2025, we found a meme coin that over 200x in less than 2 weeks. And there's been many other runners along the way, as many people know. However, the narrative trending right now is meme coins are dead. They're never going to come back. However, we believe this couldn't be further than the truth. For us, there's no other opportunity in crypto that can realistically bring in 100x returns. It just doesn't happen. right? When you have these centralized companies launching tokens, they're already in before you get an opportunity. Assets like Bitcoin, Ethereum, Solana have been around so long and they're so big that yeah, for sure, there's 2-3x potential. You're not going to get 100x in these assets. Now, that's one of the main reasons people come to crypto. They're looking for crazy returns. They want to go in, put $100 and get $10,000 in return. And you can't do that anywhere else, even in the predictions market. For sure, it can capture attention from people who like to gamble, but it's not getting 100x returns. And where there's 100x returns, there will always be a market. Now, we do believe they're dormant, not dead. Mainly this is because, as we said, people aren't risk on. People aren't willing to take risks. People are poor, people don't have money, right? They can't go out there and risk putting any money on a meme coin because there's too much uncertainty. We have to see capital flow into the majors and then into other sectors within crypto before people feel confident taking a punt on meme coins. But inevitably, this will happen. The same way people look at Bitcoin as a high risk play for the traditional markets, meme coins are the extreme. In our opinion, they'll be the last thing to run, but they will run damn hard. They're an opportunistic bet on attention and momentum. You cannot build a portfolio around meme coins. You'd be silly not to allocate a small percentage to them because even a small allocation can massively impact your portfolio. Now, warning, timing matters more than anything. You have to get in fast, you have to get out fast. In very rare circumstances, memes can stick around for months or even years. We've seen this with memes like Doge, SHIB, Pepe, and more. But you can't bet on that when it comes to finding these new tokens that can 100x overnight. Money comes easy, money goes easy. So if you are to dabble in the meme coin space, just be ready to exit. You don't want to get in, get 100x in round trip. Ultimately, I would take when risk appetite returns, nothing will run harder than meme coins. It's just a matter of time. The thesis for why remains the same. It's the only vehicle in crypto that can get you 100x's. It's a lot more fair than most crypto assets. There's no VC launches, they're organic, and everything's transparent. They're not pretending to be something they're not. This is not some marketing scheme, right? They're not trying to do anything silly. They are what they are. They're tapping into culture, energy, communities, and more. They're banding people together, getting them excited, and showing a bigger picture. Let me bring this all together. We've discussed the macro picture. Uncertainty is going to loom for at least the next 5 months. You need to make sure you're already allocated, or you'd be left chasing. The main things we are looking to allocate to are the majors. We feel majors over altcoins without a doubt. Those majors being Bitcoin, Ethereum, and Solana, and our fourth player, Hype. Now, ultimately, if you can build a portfolio around these 4 assets, of course your allocation will depend on your risk appetite. Bitcoin, lower returns, Hype, much bigger returns, but obviously higher risk. You're already off to a good start. Then by keeping your ear close to the market, you're able to get in and tap into narratives very, very early. Maybe you'll get into an RWA early, maybe a meme coin early, and so on and so on. But you have to stay in touch with the market, and that's what we intend to do throughout 2026. Look, you've watched this far, you understand our framework, but if you want more detail, and you want to know exactly how we're playing the market, especially during the volatility, and look, we'll be the first to tell you if we believe our thesis is invalidated. And in crypto, theses can be invalidated very, very quickly. It's a crazy market, it's very, very volatile. If you want to follow us on our journey, and you want to stay in tune with what we see, then you need to join Cryptonary Pro. Become a member, touch base with our whole team, and of course rub shoulders with thousands and thousands of like-minded investors and traders all looking to outperform the market. And if you're interested in a more tailored service and you want to work one-to-one with me, a head of analysis, head of research and beyond, then also click the link below in the description to get more information. Q1 and Q2 are going to be brutal, but if you play it right, you will come out on the other side, and it has the potential to set you up for the next decade. Play this right. You don't want to look back 12 months from now knowing you had the opportunity, but you let it slip through your fingers. Don't panic, don't chase. And look, if you want our exact portfolio allocations based off risk, if you want to see our risk management framework, if you want our entry and exit strategies, and you want day-to-day analysis on the market and real-time updates, then you know what you need to do. If this framework turns out to be wrong, I'll be the first to tell you. We hold our hands up whenever we get it wrong. We're not ashamed to do so. And look, when things change, we pivot. That's what you have to do in this market. That's just the way we do things. Thanks for watching. See you in the next one.